Welcome back. Once again, the Nifty IT index and individual stocks are bearing the brunt of the selling pressure. 2.5% gone for the day. This month of April, it's down 12%. And now the year-to-date loss for the Nifty IT index stands at about 25%. And individual IT names like Hexaware, 5.5% gone. Wipro, top casualty in the frontline IT pack, 4.5% gone after Jefferies downgraded it to an underperform and slashed the target price by more than 30% to 210. Coforge, persistent. These are high growth but expensive stocks, which are also seeing some amount of profit booking. But all eyes will be on TCS tomorrow. It's a market holiday, but TCS will be reporting numbers. A press conference is scheduled at 5:30 p.m. and these are the numbers. Dollar revenue growth seen down 0.8%. Constant currency growth is likely to be flat on a sequential basis. But the problem is that the BSNL contract, it was a large contract and that's slowly ramping down, which means the incremental contribution from BSNL is steadily coming down. If you strip out the BSNL contract, the X of that, the international revenue growth, according to some analysts, should be up close to about 1%. Margins could inch up to 24.8%, aided by rupee depreciation. Profits up nearly 1.5%. But that said, the numbers this time will be fairly meaningless because these are backdated numbers. All the uncertainty is what lies ahead on account of tariff uncertainty, where the US dips into the recession. So from the company doesn't give you a quantitative guidance. So they're not Infosys, which comes out and says, well, we're going to grow 2 to 4%, but we could try and gauge the corporate behavior. Are deal ramp-ups happening on time? What are tech budgets looking like? If they've been finalized, are they willing to spend that amount? What about decision-making? Are projects being put on hold? Is there a deferral in that, or maybe even a cancellation? So you can gauge the corporate behavior from the management in terms of commentary. Also, the CEO last quarter in January, 3 months back, spoke about some early signs of revival in discretionary spending in some vertical. Those were his exact words, early signs of revival. I guess that's pushed out of the window, but we'll want an update on that. And also the company had sort of said that CY25 will be better than CY24 for the international markets. That's X of BSNL. So, what happens to this commentary? I'm presuming, again, that's also going to be sort of thrown out of the window. But I think the street will watch the commentary, the macro environment, from the management. The stock is trading at about 22, 23 times PE after the recent correction. So it's come off significantly, but it's closer to its, 5-year average valuation multiple now.
Thank you so much, Reema. All of the IT stocks, like you just said, almost 20% lower in 2025. So they're going into this particular earnings season, relatively under-owned. But, let's have a look at the markets. What's actually recovered and recovered very sharply is the entire FMCG pack. RBI Governor Cummins, number one in terms of easing inflation, number two in terms of it being a normal monsoon year, has actually ensured that all of the FMCG stocks have recovered quite sharply. So you pull up names like Nestle, Hindustan Unilever, Colgate-Palmolive, even a name like Britannia, all of these stocks actually are trading near the day's highest point. The other stock that's doing quite well is actually Indigo. Some news flow as far as Interglobe Aviation is concerned, and falling crude oil prices seen as a positive. So Indigo too doing quite well as far as today's trading session is concerned. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime report is up next.